I'm Ryan Ganal, the founder of the Military Wallet. Today I'm joined by Craig Berry, a mortgage loan originator with over 25 years experience. Welcome, Craig.
Thanks so much for having me. Glad to be here.
So today we're going to talk about VA loans and how they're such a great way for military members, veterans, and eligible members to purchase a home. Why don't you give us a brief overview of what a VA loan is, and then we'll start talking about some of the details, such as how it compares to other types of loans, how you qualify, etc.
Yeah, sure. So VA loans are a great benefit for eligible veterans, active duty service members, as well as some surviving spouses. And it's just a great way that we can give back to veterans and say thank you for your service. And with such a great loan that we'll get into a lot of how it's great and a lot of those benefits that are associated with it. But it's one of my favorite loans to do, and it's always been.
Awesome. So when we talk about a mortgage is just a way to borrow money from a bank so you can buy a home. So when most people hear the term mortgage, they think of a conventional mortgage, right?
Yeah.
So let's talk about a little bit about how a conventional mortgage compares to a VA loan.
Sure. Yeah, conventional mortgages are always kind of the standard, and that's what people think of automatically, and they think that it's just going to be the best type of loan, but it isn't necessarily the best because it has things like mortgage insurance if you don't put enough down, and as compared to a VA loan, which does not have mortgage insurance.
Okay, so private mortgage insurance, also PMI,
Mm-hmm.
if you don't put down 20% when you're buying a house, the bank is going to require you to take out an insurance on your loan so that if you default, the bank is covered.
Correct.
Right. So that can, I don't know how much that costs. Do you know what percentage that is of the loan?
Yeah, it varies according to how much they're going to put down, and then it varies according to the term. And it varies according to the credit score. But the average is going to range between 0.5% of the loan amount to all the way up to almost 2.5% if somebody's credit is rough and they're putting 3% down, because there are 3% down options. But it's a big difference, a big range, but also any one of those are a lot more than VA.
Gotcha. So as I'm hearing this, a PMI on your mortgage could add several $100s a month to your monthly payment.
Absolutely.
Okay. So if I have the opportunity to get a VA loan and avoid PMI, that might be a good option, especially if I don't have a lot of money as a down payment.
Yeah, really the only time that a conventional loan as a veteran is going to supersede the benefits is if you have 20% down and great credit.